Blume Ventures join in a few minutes. We're going to be discussing the latest report that they have put out on the report called Indus Valley Report 2023, summarizing where we are in our development here in India and what is the startup ecosystem, the stage of advancement of startup ecosystem here in India, and various other factors contributing to the growth of India and looking forward where we're going to be. Sajith, we can see you. Welcome to the show, Sajith. How are you?
Hey, I'm good, I'm good. Can you hear me, Karthik?
Absolutely, crystal clear.
Yes,
Yeah,
Sajith.
awesome. Hi,
Yeah.
Vinod. Hi, Vinod.
Hi,
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 Vinod.
Sajith.
Yeah,
Uh,
sorry to give you some hairy moments, but yeah.
no,
Yeah,
I think we are like kind of used to it because this is an informal show. We can afford to slip.
yeah. Thank you for
In
that.
a way. Thanks, Ajit. I think this was long due. I was telling Karthik, I think last time when we discussed some micro VC collaborations, right? When I started Java, that's when I remember I said, you should come on our freewheeling session. But I think it's almost, we are near 3 years now. Great to have you.
Oof. Yeah, yeah, same here. Delighted, Vinod. And hey, Karthik, we haven't ever met, I think, yet, right?
Yeah,
Vinod,
yeah,
at least I've met. Yeah. So it's great
yeah.
to be here and thank you for having me. Yeah, and great to be doing some collaboration together. Hopefully, it'll translate into more collaborations. Yeah, we've done one, but we need to do more. Yeah,
Absolutely.
This is just the beginning, Sajith.
indeed. Yeah,
Yeah, and
yeah.
and and Sajid, congratulations to you on becoming a partner at Bloom. I think that was like a nice little surprise for all of us at the
Yeah,
Bloom Day. But I'm sure
yeah,
but
yeah.
congrats again. I
No,
think
no,
yeah,
thank
this
you.
is some yeah.
Thank you. I mean, it's these are just milestones along the long journey that we all have, and but this was a very pleasant milestone. It's actually a wonderful surprise for me on two counts. First, of course, the announcement. It was planned as a surprise. Then they also got my wife to come down, and which was a genuine surprise because for a second I was like, checking, is it really her? Because my elder daughter is having her class 12 boards, and so I know that she's heavily involved in that. So for her to come down was, and my colleagues planned it out very well. So that was like the icing on the cake, I would say. This pleasant surprise. Yeah.
Yeah, awesome. Great to hear that. And also, congrats to Arpit also, who's also been a good part of my journey along with you from Bloom.
Yeah,
Congrats
yeah,
to him. A
yeah,
little shout out
yeah,
to all the Bloom folks who've been, great
yeah.
over the years working with each of us in some form or the other. Yeah.
No, awesome. Yeah, Arpit is how we connected. So this is
Yeah.
great. Yeah.
Yeah.
Congrats to
Awesome.
Arpit as well.
So,
Yeah.
so so with that, Sajit, let's get to like the agenda. Literally, you've been publishing these uh, a lot of content. You've become like the most prolific content writer in the VC ecosystem, right? I
Yeah.
was just trying to think, an analogy, but I think, not required. Looks like, you're setting the bar out of India, and somebody else from US or somewhere will start emulating. I mean, obviously we've seen a lot of content there, but I think it's a nice stage that you're kind of setting it up. What inspired you, or how did the Indus Valley report kind of come into play in the first place?
Yeah. So thanks for that. You're kind. I think the genesis of this actually had to do with the Meeker report. Okay. So when the Meeker report used to come out, in 2018-19, I'd done I think it stopped in 20, okay, or 2018 or 19, I'd done a distillation for my colleagues. And at the time, we used to think, why isn't there something like that in India? And actually, one or two people had reached out to me also, saying that, how come this is not there in India? Like, who is there anything like this? So that was actually the spur, to be very honest. And thankfully, my colleagues, Karthik Reddy, Pandoras Blume, Karthik, Sanjay, Ashish, they all were very supportive when I said that I'd like to do this. And finally, I think we did this last year. and I got Amal, who is a co-author of the report, who couldn't be here. He's on leave. He's actually in the hills. He and I co-authored this. So I got a willing accomplice. So I think inspiration was, and I'm rambling now. It's too freewheeling, but fundamentally, Mary Meeker's report was an inspiration. Yeah.
Awesome. Yeah. So let's dive a little bit, Sajith. We'll start with the report. I'm going to pull up the report.
Sure.
And feel free to take us through places which you like. And me and Karthik will try and actually answer some of our own questions. As we go along, and that's
Sure.
the idea. Yeah.
So Sajith, at the outset, I just wanted to say that the report is very comprehensive. There's a lot of data that has gone into it. I know as VCs, right, we've been talking about all these things anecdotally, but it's nice to see all of this information compiled in one place. And as we were going through the report, we were patting our backs a little bit because this is exactly what we were talking about, in one of the episodes before. So we had quite a few moments like that. So what we did, Sajith, is we've jotted down some key points that we thought were interesting, where we will dig in a little bit deeper, maybe push you a little bit on why you said what you said, right? And and get to get to that thought process, right?
Sure.
So starting with the first slide, we thought that was a nice commentary on where we are right now. Tell us a little bit about what this is saying here.
Yeah. So we have this practice of having, for each section introduced through one tweet, which is sort of lays out all of the contradictions of India in one. So this one it kind of represents like your blockchain, which is like the most advanced, cutting edge stuff, and then you have I would say the fact that it's being used for something as ancient as the caste system, for I don't want to get into the politics of that, but I found the contradiction between the two. That one is like a super ancient practice, which is of course they're using it for giving out certain subsidies and stuff like that. But the very fact that the blockchain is being used for that, I found that quite fascinating. And I would say that this is sort of the thing. So last time, for example, we had this very interesting, in fact, I think the single best slide to understand India, where Abhiraj Bahl of Urban Co is actually with a plumber of his. And I said that so many levels, so many things to unpack there, right? He's a very educated plumber who studied philosophy, who's a plumber, right? But he's a Brahmin plumber, like Brahmin name at least, okay? So I said, wow, it says so many things about India. So these, in one tweet or one image, you can now understand all of the contradictions of India. So I thought that was kind of, that's a reason for this actually. Yeah.
Awesome. So proceeding from there, right?
Yeah.
I mean, there are a couple of data points, Sajith, on India, right? This is one slide, where you pick on, talking about GDP, and there's another slide where you talk about where India's movement is arrived. You talk about three different effects and why we are like at India's movement, right? So I was like super happy to see that, and you also immediately in the very next slide say, look, we've seen this before. This hype cycle has come before, right? I was keen to understand, right, what kind of risks do you see, right, for what we are seeing currently? Is it like political, social, economic, or something else?
Yeah. Oh, I think on the risk front, I think I don't see any spectacular risks, to be honest. I don't think I see anything dangerous, right? But I would say we can divide sort of the areas for improvement into a few kind of slots, few buckets, so to say. I think one bucket is I think for example, you can call it as degrading economic indicators, right? For example, inflation is high, also because fiscal deficit, as we see, we never get into macro, but 2021 was the year, 2021, 2022. 2022 was the year when we all got reminded that there's something called macro which exists, right? And for historically, I've always felt we are all beneficiaries of the zero interest rate regime, right? And I have this long-standing joke which I mentioned in a podcast that the most important person in Indian VC is Powell, who's the Fed governor or whatever they have, right? Because it's what he does that determines how we are, and all of our greatness really comes down from that zero interest regime. So every morning we should do an aarti to him, So because and of course you've seen there was this tweet today that like Silicon Valley Bank, what's happening is because interest rates went from 0 to 500 bips change, right? And sort of that. So that is one factor to keep in mind, that a lot of what is happening in India, because of the nature of our economy, it's linked a lot to the US, right? For example, the US interest rate, oil prices, even despite being a very large, strong economy, those have powerful gravitational pulls on the Indian economy. So I would say internally we need to be careful about fiscal deficit because I won't have too much time to get into it here. Fundamentally, over the last 5 to 6 years, accentuated by COVID, we have been the deficit is widened. Essentially, half of it gets converted into cash. This cash coming in has an inflationary effect. Impact of this is largely on India 3, not so much on us, people like us, because fundamentally food inflation, etc., is not a worry for us. But there are factors which eventually corrode, so it has implications in multiple places. Second is that a lot of our usage of funds, etc., from the government side, even internally, is not on gross fixed assets. In fact, I would say if slide 12 is actually, no, not slide 12, my apologies. Slide 8, India's production function, was actually a big learning moment for us when you look at that. And so I actually wanted to have a few more slides to add on credit and a few other things. We cut it out because, but I feel like a lot of the challenge for India is that 29%, very low gross capital formation. Whereas China, it's never come down below 40.
Sajith, can you throw some light, for our viewers, right? What exactly is gross capital formation, because a lot of people understand it differently, right? Like, how did you use that and what context for that?
Yeah, it's essentially any product, any asset which can't be moved around. Like, for example, any building construction would come under gross fixed asset. Bridges would come under that, okay? So machinery, adding machinery, which can't be moved around, would come under that. For example, consumption, if you go for a haircut, that comes under private consumption. If you go for iPod, that will come under private consumption. Government spends typically are government spends, right? Yeah. So of the gross fixed capital formation, India, I think the peculiar problem is only 1/3 is 1/3 is public government and 2/3 is private, which means private has to bear. So in fact, if you look at, for example, and this is actually an interesting segue to the Adani thing, and I could understand the importance of Adani because in India, I think because 2/3 of a very low gross capital formation, any productive assets, any infrastructure, which all comes under gross fixed capital formation, and which has a direct link to like GDP, right? Better roads, improve public transport, improve faster goods, and improve productivity. So, but barring the roads and a few other things, much of infrastructure has to be done by private sector. Like our port in Mundra, it's done by the Adani. So, increasingly, unfortunately, private we don't play there, right? It's a different set of people who play there, and they play a very important role. Now we can get into a lot of I don't want to get into the political angle of that, but increasingly there is a kind of I would say like a Faustian contract between the government and these folks, encouraging them to kind of build aggressively, and India needs them to build aggressively because one of the key challenges is the capacity to build, capacity to manufacture. is actually a bit low in India. So this was one big learning.
And I think you call that as regulatory rajas, right? And
yeah,
that slide,
yeah,
and also this pattern is played out in, like, to a large extent in Southeast Asia, you would say, where this kind of a relationship where really large businesses,
South Korea.
yeah.
So East Asia is where the chaebols, for example, or
Yeah.
kiretsus. So I think the term is used as national champions. So Samsung, for example, is encouraged to invest in chips. China also does it, and I think yeah. So I'll tell you. Yeah. So I would say, you're looking for it. Yeah.
No, I'm
I'll just
looking
tell
for
you.
it. Regulatory
You can
So
rajas.
go to
Sajith, while we
86.
while Vinod pulls
Yeah.
that slide up, Sajith, I think I just want to step back a little bit and reflect on the growth, the
Yeah.
gross capital formation part, right?
Yeah.
Where the government is lacking. I think the contributing factor there is clearly the low tax base, right? Which is also something that you talked about in your
Well said.
presentation.
Well said.
What were like some of the key findings there? Are we increasing the base? I know this government has done tremendous work. This central government, trying to bring people at least to get them to file taxes, which was also a huge challenge only a few years ago, right?
Yeah.
From this point on, what are we looking at? Are we looking at trying to increase this base any further? Shed some light on that, please.
Yeah. So I would say that you're absolutely right. I think one of the problems is the low tax base. I think, and there are obviously two taxes. One is direct tax, which is like the income tax, for example, okay. And there, I think one of the things you're finding out is that there has been increase in the number of PAN cards, for example. There have been increase in the number of, for example, filers. Okay. So, but if you look at, for example, the number of filers has grown by 50% since 15 to about 6 crores. Okay, but the actual payer is only 1.5 crores. Okay, so it's just 15 million. Okay, so it's point like it's 1% exactly of the Indian population. So I think, and also helped by a lot of exemptions, etc. But I think what's happening is because the base is so low and because the taxation is fundamentally so low, it only contributes some 4% of overall this thing, right? Because income tax itself, the direct tax itself is like less than 10%, I think. I think, okay, not numbers not coming to me. Increasingly, what we've done is we have moved to indirect tax, which is like GST.
GST.
Okay? The challenge there is that any indirect tax is harder on the poor, okay? Because fundamentally, any food
It passes down to the consumer.
Yeah, exactly. So I would say that that is one of the challenges, that we do not tax as much, and because we do not tax as much, the deficit is higher, right? Because you want to continue with a lot of like DBT, direct benefit transfer. In fact, one of the things is government has used Aadhaar and the entire India stack very, very effectively to create a very compelling direct benefit transfer scheme, whether it's LPG cylinders, whether it is actual cash, 5,000 rupees, which everyone in India, in the poorer classes got. It's impressive, okay, no doubt about it. But because a lot of it is, it's not, it's over and above the revenues. We are increasingly finding out that the deficit has gone. And what it also means is the government expenses are increasingly on subsidies and interest rates, less on this productive asset that I mentioned, barring roads, etc. So that also is the other factor, which is why private sector has to step in for gross.
Right. So
one of the
So Sajith, let's just talk about the interesting thing that I captured from that conversation was the jam trinity, right? Which was and you talk about that in your presentation quite elaborately, and you argue that we're almost at the end of drawing the positive effect of tailwinds coming out of jam. We're almost at the end of that, right? And we need to come up with more reforms. Why do you say that? You think I know that there is data about internet users slowing down, and mobile penetration is also, the growth in mobile penetration, smartphone penetration is also slowing down. Are these the primary ones that that are kind of encourage you to say, to come to that conclusion? Or if not, if we are done with jam, right, what next should we be thinking about doing?
Yeah. So Jam is of course Jandan Aadhaar Mobile. Specifically, so fundamentally, if you take mobile, and because mobile is really at the base of it, right? So what I found, and in the slide, for example, that you pulled up, I think one of the big learnings for me was that there have been specific structural I call it steroid shots, but there have been specific structural as well as timely actions. So structural would be, for example, I would say structural is not the right word, but for example, the India stack, then linked to the India stack, which led to Aadhaar and UPI. And in 2016, just as that got launched, we had a demonetization, and that spurred the first wave of digital payments. It forced a lot of people to come online because that's the only way you could make payments, etc. So that was the first steroid shot. Parallel to that was Geo, I think, which kind of gave the like a second booster shot or another shot, because it just made data very cheap. So all of this,
And
I
this
feel,
again ties back to your point about the big conglomerates, being the gap, filling the gaps in the puzzle.
Yeah,
The Adanis and the Ambanis of this country.
correct. If you've tracked Geo and how it got the license from 2010 to 16, it actually makes a fascinating reading. I think there was a wonderful line in one of the Mihir Sharma kind of wrote that the certain Indian conglomerates have the confidence to take certain actions, knowing that they can monetize it, or they can, not everybody has the confidence and audacity to kind of look at how. And I think Geo had that, and Geo actually added about 300 to 400 million Indians. Around the time Geo came, I think we are about 400 million people on the internet, 2016 or something, or maybe less than that. And now it's about 800 million people. So Geo easily added about 300 million of that, because the effect has started waning over the last 2 years. The challenge has been smartphone prices have been very high because of COVID. The semis prices went up. Yeah, so that has led to this. COVID itself created another boost. Okay, so all in all, I'm saying you have had two amazing one-timely demonetization and COVID, not likely to repeat usually. And then you had Geo, which is again like a once in a lifetime thing, right? A whole nation like saw internet like almost I would say quadrupling.
So one last macro question before we deep dive into other patterns, right? This is your vegan thesis. Okay. The macro larger picture before, So I was wondering, right, this is because, you're saying, we are not an export-led country. We are a service-led country to a large extent. So we are not. So question is, will we become an export? Should we become an export? That's like one larger question. Or, we have a free trade agreement with Australia now. And, we should start striking free trade agreements with the rest of the world. And, then export our services. And, we should just become a very strong, maybe non-vegan model, which is very service-oriented, which nobody is shown, all the tiger economies didn't show. This is the tiger economies, right, of the past. Maybe we are like maybe some other animal, What are your thoughts? I was like, this is a very interesting slide, I thought,
So I think if you're asking me from vegan, can we become non-vegetarian like the tigers? So I think we are an elephant, and as an elephant is vegan, right? It's fundamentally vegan. So I think we are an elephant. I think it'll be hard for us. There is large economy, and we have a. I think the challenge in India is that free trade agreement also means that you'll be open to competition coming in. And if you've looked at it, I think India fundamentally doesn't have a very strong manufacturing base as much as we would like. It is good, but it is not, I would say, like nowhere close to a China. So I think we have to be open to a lot of stuff coming into the country, impacting certain industries. And there, I think the challenge is the Indian government also has elections to win. And I think a lot of the countries which were not as democratic as India is, right? And so that does mean every 5 years, the Indian government has to win elections. So a lot of policies keep that in mind, okay? And even when you have a government like this, which has been very dominant in many ways, right? It still has to keep politics in mind. So I would say combination of anti-globalization. This era, the last 3-4 years have been anti-globalization, okay? Because countries are now saying they're becoming trading blocks effectively almost. Two, I would say that it's not easy. It's a large country to have such a strong export-oriented this one. So all of that makes it kind of challenging, and I think the model of India, very very services oriented versus manufacturing, also makes exports very tough. Right? We have been good at service exports. If you look at IT services,
Should we just
178 billion.
tell the world open up for us, right? We'll put all the services to the world. In a way, I mean, if that's our strength. I mean, that was like I was curious to find. Just ask the world to open up for us in a way. I mean,
Yes,
with
yeah.
FTS.
Services are harder. Services are harder to export. Like certain services you can't export, like barber or
Haircut.
hospital. Yeah, haircuts or like even hospitals, right? Education.
But
Not
yeah,
easy.
but like
Not
our
easy.
nurses, right, Sajith? Like our nurses are all over the world, right? Like, I mean,
Yeah, but those are not service exports. That benefit comes to India in the money that they send, remittance.
Send back,
which
remittance.
is great. Yeah, and highest ever, $100 billion, highest ever. Okay, so yeah, yeah, but happy to chat more on this.
Yeah, Karthik, yeah.
So, Sajid and Vinod, let's just, like Vinod was saying, from macro to, let's come back to our familiar territory of what's happening in the VC and startup landscape, right?
Yeah.
We're seeing a lot of startups coming up in the manufacturing space also, which is interesting. Solving. I think you talk about the parallel manufacturing, coming up as an area in India, right? But before we go there, Sajid, one thing that really stuck us was, as compared to the size, the GDP size of this country in India, right, and the consumption market that we have. It seems like the VC funding is, we're punching above our weight when it comes to VC funding and the startup unicorns and so on and so forth, right?
Are we too fortunate, huh? Are we getting more money, Sajid? It looks like you're saying neighbors are not getting money also. So we were like wondering, positive, what do we take out of this? Yeah.
Yeah, 2018, I wrote this article, India to English tax, building for the next billion users, where I actually looked at India versus Mexico. Okay. And I said, like, India effectively, and I've spoken recently to folks, the 10% of India accounts for 40% of its GDP, but primarily this is the India that has discretionary income, right? Rest of all are just living hand to mouth, not hand to mouth as desperately, but effectively hand to mouth. Okay. Because they don't have too much savings left for the kind of like products we're selling. So the fact is that when it's exactly kind of equivalent to a Mexico, why does Mexico have 1/20th India's like market, like venture market? And I think I came to the conclusion that I think India is a bit overventured, and which is what this shows here. Yes, we are lucky. I think we benefit from English, people in diaspora in Bay Area, large market and potential of large market. So definitely we are overventured. How much overventured?
Sajid, in a similar development stage, where was China?
Yeah, so don't exactly, because China has always had high China has been top 3 for a long while. Okay, maybe top 2 and now top some. I don't know if it was top 1 to it's never been, but top 2. It's not in absolute numbers. China has been more than India for sure. Okay, but what I've tried to do here is to look at for the level of, for example, there's an interesting slide comparing India versus China in terms of share of GDP.
Right.
So India's share of GDP is 3.5%, but our share of venture is nearly 5%. Okay. In China's share of GDP is 18%, right? Global GDP, almost 1/5. But its venture share is only on 13%. So that's the example I gave. And if you look at, for example, our listed market capitalization, if you take, for example, our unicorns, and I have that slide, which
Yeah.
actually looks at what 5 countries, unicorn top, what all the unicorns as percentage of listed market cap, and India is the highest. So there's so much money that's going into private markets in India, allied to the fact that the public markets are a little underdeveloped, that venture is driving a lot of, whether it's growth, whether it's buoyancy, all of that venture is driving. So venture is disproportionately important in India. For example, if you take our middle class, organized labor, okay, formal organized white collar class, around 50 million people. 50 million people, okay, that's 5 crores. Okay, now if you take that, of the 5 crores, venture itself accounts for, I found that anywhere from 3.3 million, which is okay, 3.3 million. And if you take those direct jobs, so take indirect jobs, 1:3 ratio, okay, so it's at 1.6 crores. Okay, now some moderation you have to do. So, but even if you take, let's say it's 25% less, 1.2, it is already close to, it's an insubstantial portion of, I think this is the slide. Yeah, it's an insubstantial portion of the white collar class is the broad thing I wanted to say. So,
Sajith,
yeah.
given those points, right? Plus, if you look at the investment in 2021, I think we've gotten some $40 billion
Yes.
in venture capital investment, and 2022 is definitely less, but it was not insignificant, right? And foreign remittances into India, right, is about $100 billion this year, and last year I think it's somewhere around $80 billion. But I think this is going to be a little bit controversial. We don't necessarily get the same kind of love from the government, as it as it goes to the expatriates, who are sending money back and facilitating that, right? What gives? What do we need to do?
Yeah, I think I think we need to get better at, I would say, storytelling. Okay, I would certainly think we need to get better at storytelling. I think people react to data, definitely, but people react to stories more. So a story, like for example, that there is a lady who started off in poverty or whatever, but I actually seen her incomes grew, right? Because of Urban Co. She's a gig worker in Urban Co. Or she's actually doing Misho, selling for Misho, etc. So I would say that these stories of transformation, of change, have to come up a lot more strongly. Okay, and I think we need to then communicate the power of that. Okay, to the government. Data, of course, helps, and showing, for example, a report card of annual report card of, hey, these are the number of jobs startups created, the money that is coming in created so many jobs, led to so much money, impact on the GDP, because ESOPs will actually lead to money going into the GDP, money going in and pumping up consumption, right, which impacts GDP. And all of it is coming from venture capital. Okay. 3, for example, you can talk about impact, reducing friction. Like, for example, Razorpay. Razorpay has had a significant impact on India's GDP, I would say, right? Or PhonePe, okay, or this one. They've actually made commerce, payments faster and reduce friction. So then individual impact. So I think we need to get better at telling these stories using data, using narrative, and I think once we are able to do that consistently, and I think we should do one report card, annual report card, and we got to figure out who can do that ideally, and that will give the government a lot more. At least it gives us better. I would say, I'm not saying that immediately everything will change. It takes time, but at least it'll give us great standing with the government. Because right now, I think with a lot of the laws, a lot of the regulations, the right hand and the left hand don't necessarily coordinate a lot, is what I would say. I think while the government does appreciate and understand a lot of things, but I think, like, for example, the angel tax, for example, and a few other things, like drones. We still don't have an effective drone thing yet. Okay.
Regulation.
So all of that regulation, yeah. So it'll happen, but
Yeah.
so
So
yeah.
Sajith, this show, right? We plead a lot to the finance minister. If you had seen our previous episodes, right? Pretty much, we keep telling, please, hopefully someday, Nirmala Sitharaman listens or the finance minister or the time listens, right?
Yeah.
In any informal way. So Sajith, the other interesting aspect, right? I've been trying to get my story in the narrative violation, but it is a narrative violation. But that's a story I've been trying to bring into this conversation, right? There is everything going for this country, and data is indicating everything great, and then you have this bomb in the middle, if I have to call it, right? This the truncated tram, there's a
Yeah.
article in TMC yesterday, I think. And then I recently heard Nitin Kamath of Zerodha also,
Yeah.
been constantly telling, I think we don't have the let's say the affordability for a large population, for the services that we are all envisioning and thinking through and trying to build, right? This is a massive narrative violation, right? So what are we going to do in this case? On the other side, we have more venture capital funding than other countries which may require. So there is a lot more supply of capital, less affordability. I mean, are we all because sometimes, are we all going to sit and wait for affordability come? Are we going to continue to keep on investing and hope that, the capita per GDP will catch up? What do we do is like, seems like a
Yeah.
very conundrum, real conundrum, if you ask me. I mean, we both are, and all three of us are VCs, and we know this conundrum.
Yeah. Yeah, you said it well, you captured it well. I don't think I can do a better job of illustrating this, but I would say that I think the solutions. I don't see any immediate solutions because I think a few things are happening. One is are this 10% of India, which is about 150 million, you could say, accounting for about close to half of consumption, which is a real market. Even Nitin says 150 million is the tops, right? So I've actually put Nitin's comment to a slide. So that'll expand, okay, but it'll take time, right? It'll take time because a lot of it is subject to the per capita income. Then growing. Now, per capita income growing, there are many factors involved. So that is one constraint. On the other hand, I would say, for US or global based LPs, India is solving a capital allocation problem because please understand, many of them are very large pension funds, etc. They have to generate returns, right? And US interest, like the contribution money is going up. So there's a need to get higher returns because till now interest rates were pathetic in the US, right? 0.2%, point. So now they've started increasing their allocation to venture and riskier alternative assets. Those are large funds. A small shift there, like 0.1% like 2% allocate to venture, of which a certain percentage will go to India, means another 200 million, 300 million is coming into India, right? So the thing is, we are simultaneously challenged on both fronts. One is the per capita income has grown a little bit over the last 2 years, but 3 years before that was almost static. So when will it hit $4,000, $5,000? It'll take time. I mean, whatever you may see in reports, it's not going to grow as fast as some of the reports are making it out. It'll grow, okay? It'll grow at a certain rate. Meanwhile, there's more and more money coming in because India is solving a capital allocation problem for them. Morning, that guy wakes up and says, "Oh, I've got $300 million to invest." It's the highest of the first world problems, right? Apex of the first world problems. The lowest is my maid didn't come, okay? But the apex of the first world problem is I have to allocate money. Just imagine Master's challenges. He wakes up and says, I've raised so much money. Where do I deploy? So it's So I think these challenges mean that we'll exist in this conundrum state, as you said, right? It'll take time, but one way is to intentionally seed and especially Indian consumer focused startups, encourage them to understand that the real market is much smaller than they think. And if they're raising a large amount of money, 100, $200 million, which means they're getting into territory, be very intentional where the growth is going to come from. Maybe it's not going to immediately come from India, abroad, or maybe So I think those are challenges that you'll have in India, and I think there's no easy answer really. Yeah.
No, thanks, Sajid. I think that was like a tough question for all of us in a way, but I think it's interesting also to think about it really at a great depth. And for all the first world problem people in the European and the American continent, you know which funds you should invest in. We'll make it easy.
Yeah.
Yeah,
More to the seed funds because seed is much smaller as a proportion in India, as you saw in the chart.
Yes,
We're not even 10%. We're not even 10% of the venture market.
Yeah. I think more seed, more experiments, more risks.
Yeah,
I think, right? And also,
absolutely.
it's getting concentrated too much on the late stage and growth stage. I think.
Absolutely.
So let's talk a little bit about that, Sajid. This year, obviously, it's we're in the midst of a tough. Maybe since the second quarter of last year, right? It's the going is tough for the startups in terms of raising funds. None more affected than those who are looking for growth capital, right? More or less, seed rounds are still ticking along, and in fact, the seed rounds have gone up as well. Which is something that you observed in the report as well.
Yeah.
What is happening? When do we see this? Are we going to anytime soon? Are we going to end the dependency for growth capital on foreign funds coming in and investing in India? According to their whims and fancies, right? If there is no tiger, how are we going to survive, right? What is the answer to that?
Yeah. So I would say I would differentiate between two kinds of growth capital. One is what we call early growth. Early growth is, I would say, there is foreign, like Norwest, Bessemer, etc., Bertelsmann. Then there is Indian funds also, Gaja, multiples, True North, Westbridge, etc. So early growth is, I would say, very value additive, right? Series A, they come in typically Series B, C. That's what I'm talking about. And I feel they are genuine. There is Indian money there. Okay, there are some family offices also invest, and they're extremely value additive because they help founders think about the first point of scale, how to hire a CFO, how to put in place certain operations, etc. Right? I think what happens is there's been an amount. So they also take board seats. They focus on governance, etc., etc. Now, what happens with certain late growth is there is a lot of money that needs to quickly be deployed, and sometimes comes with very little governance, etc. Right? And these are large, nameless, faceless. They're all typically global because very few Indian funds have that kind of money. And I think I would differentiate between these two, and I would say the early growth is much desired because it's also coming in at the 100, 200, $300 million point, at which there is still some room for growth, room for this, etc. The challenge with coming in at a $3 billion, $2 billion, to putting $200 million is the person coming in $3 billion saying you have to hit $10 billion, right? Because all of us wanted 2-3x in the next round. That to happen, then you're talking about colossal growth. Now, we are saying the Indian market is not as big as we are saying. Yeah. So I think all of us need to be sensitive, and I think founders genuinely need to kind of ask themselves, great, I can easily raise 200. Because why? I'm solving a particular problem for that person. For him, he needs some place to invest 200. But is it right for the business? What would be the right thing? And there I feel Indian startups should go earlier to IPO. Okay. And I think a great path for Indian startups would be early stage, like pre-seed funds such as yours, then possibly late seed, pre-series A funds such as us, then or Series A, Series B, bring in the growth guys, value-additive growth guys, and by Series C, explore going to an IPO because in Sula, Traction, they've all shown that you can go to an IPO with
that's
400,
interesting.
500 crores.
You're saying go IPO, don't go for more late stage funding, go IPO. That's pretty interesting.
Yeah.
So yes, is this also coming from this other slide in your deck which says, right, the Indian IPOs, didn't allow retail investors to make a lot of money and everybody is down 50%. If I can pull that slide right parallelly, and you're saying go early, but I think people won't be mature, companies won't be mature. Don't we run even higher risk of saying startups are I mean, if without using the word gas, right? And people, that's what they say, right? Once it go to the public market, the abuse that comes right on the media, especially on the Twitter and social channels, saying you guys are investing a lot of money, right? I think won't we be subject to more abuse in a way then?
The same media who celebrated the
funding
rounds is happy to throw egg at you.
Here's the slide, Sajith.
Yes. So, I recently tweeted in one of my last tweets is that the more you build to be private market heroes, right, unicorn, etc., you will become a public market villain. Like what I meant is the way you are building, like you take $200-300 million at Series B, Series C, Series D, and and you are then at 4, 5, 6, $7 billion valuation, and then by the time you come to public market wants more growth, wants, I would say, like stability, wants, for example, a clear path to profitability, or at least profitability. So all of that means that you are effectively setting yourself up to be punished in the public market. I'll try and pull up that tweet of mine.
Not to mention the governance and the lens the companies come under.
Yeah, correct. So I would say that you mentioned gas, you mentioned that. I think if you're cognizant that you want to list at like 250, 300, 500 crores or a little more than that, 1,000 crores, etc., and you want to kind of list when you're in the $2 to $5 billion range, maybe more, maybe less, depending on the company you are at. I think when you know you're going to list, you take certain behaviors. You think about your business in a certain way. And one of the interesting things for me, I'm reading a lot about the IPO. This thing, we put out a very interesting article on how to go IPO, etc. So is that the public market investors care profitability? Fine, okay, but even unprofitable companies have listed. What they care about is the stability of cash flows and how the growth consistency. They don't want to see, you grew 30% this year, 0% this year, 25% next year. No, grow 12%. That's fine. Okay. A lot depends on how you are able to sell the story of your startup, the narrative, how you build the narrative. Accordingly, you will get the right kind of investors into your this one. So. Go on.
So I think a couple more. We have 10 more minutes. And I want you to also talk about one particular slide. But I just want to quickly cover climate and deep tech. Karthik, I can't see. Okay. Climate and deep tech, two things, right? You've talked about climate, but not about deep tech. So I want to actually ask you, why not cover a little bit of deep tech? And because there's a lot of innovation that's happening, and you mentioned about moving from services to products to innovation, but I think probably the next report will have something on deep tech saying there's a lot more hardware and innovation that's happening. The climate also has a sense of deep tech and innovation. So hot year for the climate, literally, from both funding point of view and temperatures point of view.
Both are interlinked. So certainly we could have done more for deep tech, 100%. Space, for example, is one area. Materials is another area, for example. Then health itself, like very interesting things. So I would say definitely look out for a section on deep tech next year in terms of some of the advances and something we need to research out as well. Climate, we tried to cover a few slides, never there, but expect a lot more on this next year. Healthcare, we haven't done much. So healthcare is something we might look at next year as well. E-commerce we've always done. So we'll continue to e-commerce because it's one shot, you get visibility to many sectors. This year we did media, but next year expect healthcare, maybe deep tech, etc. Agri, I always wanted to do. And next year I might even collaborate with some relevant folks. That's one of the thoughts I have on maybe a few slides could kind of be in partnership with very good agri-tech thinkers, etc. So we'll look at all of that. So yeah.
So Sajith, for now it's like over to you for you to pick up one or two slides, where you really want to talk about. Tell me the number, and I'm going to pull it up, or anything specific, we'll pull it up.
Yeah, so I think you've covered bunch of it, but I would say there's I would love to talk a little bit about the Indus Valley playbooks towards the end, right? And
Yeah.
the soft power of Indus Valley. But let's look at the playbooks, okay? And
Yeah.
to me, I think I'm a big admirer of the ingenuity of Indian, I would say, founders, right? Both startup and otherwise, right? Because it's a very tough market. There was a tweet, right? Indian enterprises behave like SMBs and vice versa, right? So I'm very impressed with the innovativeness. And in the last few slides, we put out some very interesting playbooks on SaaS. I was actually, I spent a lot of time looking at SaaS, and I found this very interesting that somehow we don't talk much about it. There is no one book on it. When the US, anything happens, there'll be one book on it. Why isn't there a great book on UPI? I don't know. Okay, love to kind of, I would say, like, if there's a
Q
Kickstarter.
for Nandan.
No, we need more Sajits,
Yeah.
right?
Yeah.
I think
No.
the Indian tendency. I think people don't write a lot.
Yes.
I mean, including
People
us.
don't
I
write a
feel
lot.
right. We are happy talking
Yeah.
like this, but you ask us to
Yeah.
write the moment, right? Then we are off to breakfast in our Darshini. That's the problem.
Yeah. That's true. So I would say, like, very controversial topic. One huge advantage I have, but the thing is that I'm not in Bangalore, and I feel like I have that advantage of less events to attend.
No, Sajid,
Yeah.
it gives you, you don't have to spend too much time in traffic so that you use it more productively, reflecting
Yeah.
on things that
Yeah.
really matter.
Karthik opened the
Yeah.
Pandoras box. Yeah.
Yeah, exactly. Yeah. So this slide is very impressed. I found we've actually pioneered a very interesting motion, which is basically content-led inbound, supported by inside sales to convert. And I feel this is really the core thing that is powering our SaaS kind of this one. So we have moved beyond this. Like, we have started selecting enterprise like Dhruva does. We have started doing PLG motion like a Postman does, or a Lambda test does. So very impressed with how SaaS has evolved. But at the heart of it is really this motion that got built out. This unique playbook, and a lot of credit to the four horsemen of Chennai, really, right? So Zoho, of course, I think pioneered in many ways. Girish structured and systematized it and took it, and supported by Charge B's Krish and Suresh of Kissflow. These are the four kind of firms where this motion got established. And I would have loved to kind of read like how did this happen in Chennai? Who were all the actors, etc. And even an article would be great, like a 20-page article, 15-page article.
No,
But
well, we will try our, maybe we can try bringing some of them here and telling the stories over the next few
Oh
months.
yeah,
Let's see, we
please
can try.
do that.
Yeah.
Yeah, please do that. And if you can get two of them in the same thing, then we'll all salute you. Yeah.
Not the big boys. I think it's going to be harder to get the big boys. We can
That is
bring the
true.
seed folks, not the IPO folks or the non-public.
True.
We can try.
Absolutely.
Sajith, Karthik has one more to go.
Yeah, Sajid, I think I pretty much understood everything that is there on the deck, right? But there is one slide that really confounded me, and it's not really about startups or VCs, strangely, right? It's about a couple of fruits.
Let me try and slide.
If we can bring that slide up. I don't remember the slide number. As somebody who is challenged
it's
with the popular
16.
culture,
16.
I'm getting the avocado. Yes, Karthik likes avocados, by the way. So.
No, this was actually from a serial actually written by Manu Joseph called Decoupled. And I think I found it very funny because I've actually written an article called India One Avocado Startups, etc. And actually uses term called avocado startups for these very elite startups, right? Which cater to, you have this single estate coffee or stuff like that, right? It's not going to be consumed by more than 2% of India. Maybe there's a great export market there. Okay, but there's a great export market there. Okay, so I felt that like this avocado startup was a term which I kind of created. It's now stuck. So when this happened, avocado and a banana, I felt like, wow, this is like India 1A and India 3. So that's the
No,
story. So yes,
yeah. No, also, Sajid, I think there was some art museum where there's a banana placed, and somebody plucked the banana out. A couple of years back in an art museum. So,
yeah,
like that
yeah.
was the art. The banana, just the banana was the art.
Correct.
Yeah.
Yeah. No, art museum you go and you suddenly drop like a handkerchief or something, right? And then people will suddenly start walking around it, like they actually think this is an art installation,
Oh,
like
art.
but it's someone's handkerchief that's fallen down, and a few minutes later that person will come and take the handkerchief, and they'll say, "Oh my God, this is art!" Like,
No,
so
how
yeah,
to target India one, right, is a altogether different story, isn't it? Like,
yeah, it's true. That's true.
they'll buy a drop-in handkerchief and a banana on the wall. Yeah.
True. Well
Okay.
put. Well
On
put.
on on
Yeah.
on that note, Sajid, thank you so much for joining us. Appreciate it.
Yeah.
Um,
Yeah.
uh,
Actually, Sajid, we have a couple of audience questions. Okay, and now if you
Yeah.
can
Yeah.
spare
Yeah.
a couple more
Yeah.
minutes,
Yeah.
we'll just quickly
Yeah.
ask you
Yeah.
those questions as well.
Yeah.
One is about uh, secrets for crafting a thriving community for SaaS,
Yeah. Yeah.
like
Yeah. Yeah.
Avinash and Suresh. Um, so what are those
Yeah.
secrets? And then the other question is about one thing that you did not curiously talk about, a couple of things you did not curiously talk about in the deck, discussing macroeconomic side of things, right? Our labor reform and the wages, stagnant wages. So just share your thoughts on those two
Yeah. Yeah.
things, please.
Yeah. Yeah. No, so we eventually had to curate a lot. I mean, this could have been a 500-slide presentation. We looked at I think close to 4,000 data charts, okay, and which kept coming down. So you're right. But finally, we had to select, like, for example, I think the single most important thing you asked me ignored was credit. Like credit and how credit is a choke point for even gross fixed capital formation, investment, etc. So labor reforms would be after that actually, but you're right. I mean, could have included that. It's worth looking at it for next year. With respect to SaaS communities, etc., I think we need more communities in different stuff. I think the SaaS, it's incredible how a paid forward community emerged, and I think at the heart of it, the secret is, I think, and again, my colleague Arpit is actually a better one for this because he's a community, like he's so passionate about community. He started Head Starters, etc. He was one of the co-founders of Head Starters. I think fundamentally paid forward culture, right? And I think heart of it, that is what it's come down to, a paid forward culture. And if we can try and do it for other industries, D2C, for example, is seen as a very interesting D2C insider community. And they do a lot of events and meetups. Deep tech, I think there was an India deep tech, this one. I think we need to do more there. I would say we likely to see a few more communities like this emerge. D2C is the one which is seeing the most action, I would say, from what I'm hearing. Okay. So there's a flourishing D2C, it's called D2C Insider. There's one or two others as well. Yeah. That could become big. Other than that, maybe deep tech could be a good one. But SaaS is incredible because they did not do to lobbying, nothing. It was just pure, I think, a paid forward. So perhaps it needs one like spark, like someone like a Girish to kind of come in there and kind of spark that off, really. Yeah.
yeah. On that.
All right. I think, Sajid, that's a good prescription for us to end this conversation on today. Thank you so much for joining us. Really, it's always a pleasure talking to you, Sajid. Have a lot of pointers. You go away, you go home with a lot of thoughts and pointers every time.
Enjoyed this. Very cool initiative. Really enjoyed this.
Thank you, Sajid. Look forward to the report next year and more articles.
Yeah. All right. Bye.
And
Collaborations. Thank you so much.
Bye-bye.
Take care.
Bye.
Okay, folks. I think that was like. I'm hoping somebody will call it a mind-blowing session. Karthik?
Of course, it is. I think it's terrific, right? Sorry, my mic was on mute, but yeah, for sure. I think this is one of the good conversation that we've had. It's all, we covered various parts, right? Macro, micro, and then we see some controversies, some reading between the lines, some extrapolation. So it's always fun to have these kind of freewheeling conversations. And thank you so much for all of you guys who are joining us on YouTube, LinkedIn. I hope, I wish we could have guests every session, man. I think we should solve that. Let me just publicly put Manoj in a spot, and Manoj is an analyst in our team, and maybe we should task Manoj with getting more guests like Sajith. Manoj.
Absolutely.
Now that it is out there, you cannot escape it.
No, absolutely. Okay, awesome. Then with that, right, thank you for all the feedback. Look forward to another session next week.
Next week.
Unfortunately, Bhargavi couldn't join us, but I think, she's here in the stream. Yeah.
Can I just do a plug for our podcast also?
Please.
We've been putting these freewheeling sessions on YouTube and LinkedIn for quite some time. We've started doing it on podcasts as well. So please look for us on podcast and subscribe it. If you're driving to work, you can listen to these conversations on the way, and participate. Yeah.
Thank you.
Thanks a lot, guys.
Have a good weekend. Thank you
Bye-bye.
all.
Take
Bye-bye.
care.
Take care. See you guys.